Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 20th, 2020. What we're going to do in this video is start out with a brief overview of the broad markets, and then the primary focus of this video will be the semiconductor sector. I'm seeing a lot of things that stand out to me right now. I think it's definitely one worth monitoring. From time to time, I've done some updates here. We've been waiting for some solid sell signals on that sector. They haven't come yet, but we may be there. We may be very close. Now, keep in mind, semiconductor is a big component of tech. Tech's the largest sector in the market, so it's unlikely to see, any significant correction or drop in the semis until the market breaks. So we're going to start with the broad market, and the line that I've been watching for actually months now. We've had these blue levels. Now we've gotten quite a bit away from the 318.30. When we were back here, said that's a level that needed to break to open the door to more selling. Otherwise, the trend would stay intact, and we actually, since those lines were added, we pretty much hit the blue uptrend line, and have been moving higher. As I've talked about, we've been testing the highs from back before the COVID hit, the all-time highs in the market in February. Sure, the headlines talked about a closed new high, but no follow-through. Typically, if a security breaks out to new highs, it continues a run, and so far it's a failed breakout. Now, look, I'm not going to try to spin this as overly bearish. We're just still trading in that range. So whether you're, a tenth of a percent or a 2-3% above it or below that old high, not much until we start to see some significant technical developments. What would that be? Well, big candles, whether they're green or red, solid move up, breakout, and rally up above that previous high, or break down here below the trend line. So this is the uptrend line that I've been waiting for a sell signal on the daily chart. Don't get that confused with the intraday charts. Those are good for your shorter term sell signals. We did get some recently. I'm going to talk on those, but here we are. We were pretty much just above that trend line, and with resistance just overhead. Again, that all-time high back from February earlier this year. So sell signal would be pending, and which way it goes, I'm still. These divergences indicate the most likely result. Whether we pop the new highs or not and get a marginal new high, the bottom line is if and when we break this trend line and these divergences are still intact, just like they were back here, that's where you look for the trend reversals. So that's what SPY is doing right now. QQQ, not representative of the U.S. economy, more representative of the tech sector, namely the big FANG stocks. However, a very important one to watch, and there's the trend line. So QQQ is, let's say, comfortably above it, but not by a large margin. It's only about one, where we're at right now, call it about 2% or so above that level. So that's technically speaking, one bad day, a drop of 3% or more is going to do the trick to take us below that trend line. Other than that, we are above trend, so no sell signals right now on this daily chart. Just to jump down to the 60-minute charts, because I mentioned we did get some sell signals there recently. This is the 60-minute chart of NQ, the Nasdaq 100 futures, and so the most recent, again, short-term sell signal in this shorter-term time frame was this breakdown right here. And we're back testing as I do the video. So I will say this is an objective level to short. Do I promise it's going to work out? No. You can control your stops or set your stops based on your price target. But I've already shared these levels. I don't want to go into these charts in too much detail because I have a lot of semis to cover. I just want to say we are back testing the trend line that we broke down that had the impulsive selling, gave us a sell signal, bounced off that first support level. Next target would be this uptrend line, and then you can see all my marked levels there. On ES, the S&P 500 futures, sell signal still very much intact, just like NQ. We're coming off a divergent high, negative divergence on this 60-minute time frame. We had a nice clean uptrend line on this 60-minute chart. Breakdown also below price resistance, and a failure of the breakout to that all-time high. A very feeble, unconvincing breakout. So far, a rejection. Again, not the end of the world. Sometimes you break out once, and we'll know that that's it'll be safe to say it is a bull trap or a failed breakout when we start to hit these my next targets, especially this first one here. Well, obviously, the more you go down, the more clear it is apparent to all that the market failed the breakout. So these are still my targets, still my preferred scenario. Minimum target right now 32.82, first target 33.25, and then the small caps, they also broke down below that 1570 support. Remember, we had a sell signal even before right here, break of the uptrend line, pushed against this 1589 resistance, couldn't clear it. We're trading in this trading range below between 1570.20 and 1589, and broke down, and we're back testing. So just like NQ, objective short entry, because you have a break of support and a rally back to that support. Support once broken becomes resistance, and you can control your stops. You could have a very tight stop somewhat above, but I think better to have it above 1590, a little maybe 1595, somewhere in there. But again, it's all up to you whether you even care to short, or how much you're going for. Remember, the long-term charts are still pricing in a significant trend reversal. We just have to get the sell signals. We have to reverse that trend first, and so those are the levels to watch. So to reiterate, daily charts, no sell signals yet. 60-minute charts, yes, we do have the sell signals. All right, now let's roll into the semis. I'm going to talk fast because I do want to cover a lot of charts. What I'm going to do is start out with the ETFs. So if you don't care to look at 30 or so individual semis, because what I'm going to do is cover the components of this one. I'm going to cover the three main semiconductor ETFs that I follow. That's SOXX, XSD, and SMH. They're all three companies, so three ETF companies, three different baskets of semis. Obviously, a lot of overlap in there among the names, but just different weightings in a different basket in each one. But why did I do that? Well, if there's three different sectors, semiconductor sectors, and ETFs that track those sectors, obviously, you don't want to jump the gun if one of those breaks down, but then the other two are still above trend, maybe hit trend line support or price support, and they bounce and they rally from there if that support holds on the other two. So if you want, if you track these three and you have some pretty clear trend lines on 1, 2, 3, levels to trigger an objective short entry or sell signal, and you get 3 check marks, well, guess what? You're going to have a much better chance of success, meaning a lower chance of being stopped out on a whipsaw signal if you do short than if you only had 1 check mark. All right, so this one starting out here, SOXX. This is the iShares Philex SOX Semiconductor Sector Index Fund. There's your nice clean uptrend line. Why I say that? Lots of reactions along the way, and here we are. It's broken down. It has triggered a sell signal. Market's up today right now. Semis are down 1%. I can tell you right now, I like this sector, and I'm going to take this sell signal on face value. It is not the most impulsive sell signal. In other words, you'd want to see, ideally, big red candle, big selling. But again, it's priced into the charts that this breakdown was going to come, and it has come. There's big negative divergence here. Sell signal right now. Again, you want to put the odds in your favor. You can wait for a solid red close above there just in case it proves to be a whipsaw. What's a whipsaw? Well, right here, for example, you have a stick save that day where you broke down below the trend line only to rally back and close on it and keep the trend intact. So we're only slightly below the trend line, but we are below it. And I'm going to go over a basket of all the holdings in this one after I cover these main ETFs. There it is on the weekly chart. This is big. This is the bigger picture, and I keep coming back to the semis. I've been highlighting them for a while because there's tremendous amount of meat on the bone. When the next tradable correction or bear market, whatever you want to call it. Now I'm talking double-digit plus correction. When that comes, you can go long, or you can short the broad market. You can get out of your longs. Obviously, that's why I do this too. You might not short, but you might say, "Hey, Randy, I've been riding the semis, but when do I exit? It's been a great trade." Same thing. Once you use trend lines, put your stops below there. Look for these sell signals, and that'll tell you, hey, the trend may be over, and you can get out with minimal give back in profits. But what I was getting at is you get a lot more bang for your buck shorting the semis than you do shorting the stock market, even QQQ. Why is that? Well, if you short the S&P 500, you're shorting 500 companies in 11 different sectors across the economy, many of those being defensive issue stocks like utilities and REITs, some high dividend paying stocks. Those tend to fall less during a drop. So the semis tend to have pretty big moves in their in the trends, within the trends. And you can see very clean up trend line on the weekly chart here. Big divergence building, negative divergence on this weekly time frame, just like we had before that big drop right there into the March lows there. And just like we had a divergent high there before that big drop back in 2018, pretty much all year, bear market in the semis from early 2018 to the end of the year right there. Okay, so that's stocks, and then just again to look at the others, SMH is telling a similar story. PPO is starting to curl down and roll over. I don't have the divergences all, every line marked on every chart here, but you can see the similar story. A nice clean uptrend line to help signal a clear and objective short entry or exits on your longs. Just like you had a clean uptrend line there, a big gap down below. That's as good as it gets for a sell signal, and there was plenty more meat left even though we gapped down there. And so, you know, you may not gap down, but what you want to see is a solid weekly close. This is a weekly time frame. That will even increase your odds further than, you know, waiting for a sell signal on the daily chart, which we do have here. I'm just toggled back to a daily time frame. You can play with this line, give it the benefit of the doubt. I think that's a good fit right there. And you can see again, just lots of clean reactions along there. And boom, we broke down and we're trading below it today. So there's a sell signal on the semis. Would it certainly help to see the fangs break support? Yes. QQQ, SPY, especially on the daily charts, yes. So the trend's been resilient. Any short entries here I would consider a very aggressive entry. It's a counter trend trade, and we don't have the sell signal in the markets. So if you are an aggressive trader, maybe a starter short position, and if you're not, just hold off, wait for additional evidence. Again, I'm going to go over the charts of the individual semis and the way it works there, just like I gave you 3 check boxes on these 3 ETFs. Here's XSD, the other one. When you get the, I haven't even updated this chart in a while. I need to bring that line in a little tighter. Sometimes these lines drift. There it is. You know, nice clean trend line, divergent high, everything you want to see, just like you had the divergent high back here. That preceded the drop of about 40% last time in the semis. And again, you can go back for many years, and most of the big drops, not all, but most are preceded by these negative divergences. And this time around, you have an even cleaner trend line. So there it is. Again, sell signal, check 3 check boxes. A little bit of questionable again because we haven't seen the fangs break down or the broad markets, but these may be the catalyst. So, all right, let's roll into the individual components. I'll say no more on that. I think I made my thought process or viewpoints very clear, and we're going to go through in order of market cap. Just keep that in mind. So as I go through this list, this is the largest one in the sector now, at least in SOXX. Let me make sure. Yeah, I do have them sorted by market cap. Intel used to be the leader. No more. NVIDIA is a $302 billion company. Intel now is all the way down in second place at $262 billion. We're going to get to that in a second. But so, you know, NVIDIA is strong. The largest one just reported yesterday after the market closed, and flat today. You know, you can see right here 0.08%. So really no upside oomph following the earnings. I didn't even read the headlines. I glanced one headline. I'm sure they beat and all that. But what you're seeing is, you know, so far, and you can't read too much into it. Just, you know, the day after, see what the next week brings. But you know what usually happens even when a company blows it out of the cover after a huge run, how much of that's already priced into the stock. Either way, there's your trend line. You can replicate that trend line. Comes off the April low, set an alert. Big negative divergence on NVIDIA. You look at the weekly chart, and we've been building divergences for a long time there. And these are long-term bear market targets for NVIDIA. I know that you know, might sound crazy to some out there, but I maintain these targets. I've maintained them for a while. T1, I can't remember when I added that, if that was already hit there or not. Either way, that'd still be the next. Well, I could add another target here. I haven't updated this chart. It's been a while since I've done an update on the semis. They moved up enough that 290 would now be my first target on the weekly chart. Okay, probably need to move a little faster here to get through the rest of the names. So I'll rifle through these. Intel, we already knew last time Intel reported was July 23rd. Earnings smackdown. The street didn't like what they heard. And then that was also played into NVIDIA and some of the other ones that actually helped boost them because I think it was Intel was late to getting behind on launching a new chip, and so it benefited some of the other chip makers. So there it is. Intel is a stock that's already long since topped. Weekly chart, looking poor. Big divergent high back here, and it's been stair-stepping lower. So at this point, no, not the most. I don't see a great setup in Intel. I just want to point out that it's already well off the highs, peaked back actually at the not even the April earnings. These are earnings lines. So the one before that, they had a big pop up, and look, there's an example of sometimes when I say don't jump on or read too much into the initial reaction. The earnings was after the market closed that day. Market loved what Intel said. Initially, they bought it, but then they faded. And that was it. That proved to be the all-time high in the stock. And the stock since that earnings report would have been 3 months before that, April 23rd. That darn thing is down. Well, from there it dropped about 38%, but it's still down, 28%. And I just point that out, just kind of gives you an idea, because that's industry leader right there, Intel. Taiwan Semi. Okay, so here's a common theme, and as I go through these, there's two takeaways. If you want to trade individual semis, you can usually outperform the sector. Whether you're going long in a bullish sector or short in a bearish sector, you can usually outperform by picking the most bullish or bearish individual stocks within the sector. So there's one takeaway, or the trade ideas on these individual ones. And the other is what you want to look for is, as I go through these charts, the more that have broken down, the better. Okay, so there's, I'll tell you right now, let me tell you how many in SOXX. There are, I'm clicking a watch list on another page, exactly 30 holdings. So, if you get, let's say 15 or 20 check marks, meaning stocks that have clearly broken down, then that's going to increase the odds that the sector is going to fall as well. It'll confirm sell signals on the sector itself. So there's Taiwan Semi, a little trend line break there recently. It's been dancing around on 76.85 support, broke it today. There's a sell signal. I don't have a whole lot of support. There is a top of a gap there, but I think these are the targets, and this is where I think it's going right there, 60.36. And my confidence will increase greatly if and when we get those sell signals on QQQ and SPY. That's about a 21% drop from where we're at now. ASML, nice uptrend line, bearish rising wedge pattern, divergent high. A lot of these you'll see the words DH means divergent high, which means negative divergence right there when a stock is making higher highs and the indicators are making lower lows, just like this was a divergent high right here. Take that little letters. That was a divergent high. There was one right there. And so that's what happened. So we broke down. We back tested. Breakdown, back test, and we've been bouncing on this 356-ish or 358-ish support right there. Need to take out that level, opens the door to the next target. That's 318.80, and then quite likely all the way down here. So there's your next. We're already on a sell signal, but we need the next sell signal to trigger now. AVGO, Broadcom, this one, there's a lot of lines here, but let me tell you what stands out to me. Right here, we have one, well, not just two, but two clusters, 3, 4, there's another one. This one is hitting a brick wall here. Now, it could break out and run. That's bullish, and it can burn through these divergences. But as of now, we are at very well-defined resistance. This area, it's more of a resistance zone with negative divergence and coming off overbought conditions. Just like we were right here, see the negative divergence? Boom, drop. Right here, when we hit that level, we had negative divergence all the way up to that point right there, or actually where I had the line, and then boom, drop. And here we are, we're at the same level, same technical posture, negative divergence. Because of this tells me, because when you get to resistance, it can go one of two ways. It could be a breakout, and that's bullish, or you could get rejected. And it's things like this, and the fact that this stock has come up, 113% in a matter of months, that tell me that it will most likely fail, even if it pops anytime soon. A relatively small and brief pop, that would be what I call whipsaw or a false breakout, and this one's probably headed back down here to 256.62. Okay, a few more, well, several more. Texas Instruments, this one keeps kind of stair-stepping higher, breaks out. You had a similar technical postures, negative divergence, correction, negative divergence, correction. And then look, you look for these bullish divergences as well, and that sets up the rally. Negative divergence at that high, correction. Here we are. So wash, rinse, repeat stuff. First time in a while we've had negative. In fact, we had it here, and it did play out. It played out for a pretty decent correction, but we pushed on up and simply extended, made the divergences even larger than they were at this point, which indicates an even larger drop. So there's your primary trend line. It forms a big bearish rising wedge pattern with your divergence line, and the uptrend line there. And so remember, divergence isn't a sell signal. Some of those other stocks I already covered have triggered sell signals on breaks of support, trend lines. Sometimes you get bearish candlestick patterns that'll give you a sell signal, things like that. But that's what we're looking for. We're looking for a break, the next trend line break, and that will open the door for a much deeper correction in Texas Instruments. And the scope of these divergences indicate that it's probably going to be a pretty sizable correction when it comes. This one has a history too. Every stock's different. This one has a history, unlike the last one, of breaking out, taking out the previous high, and giving you those fake outs, those false breakouts to new highs, followed by a pretty impulsive correction. And that's where I often say that fewer things in trading are more bearish than a failed breakout because of that. Longs pile in thinking, great, the stock broke out to new all-time high, that's bullish. Shorts get squeezed out, and then boom, the bottom falls out on them. AMD, Advanced Micro, one of the stronger ones out there. The Intel, earnings, report and their guidance really turbocharged this one because AMD is head-on direct competitor with Intel, as most of you know, and so that helped them. So look, one of the stronger looking stocks chart-wise. I'm not going to knock it, but it has just a big history of big corrections following the divergent highs. And there's where we're at on this weekly chart. That was our last divergent high. Still have divergent high right now. There's a trend line to watch. Again, this is a weekly chart, so those are longer term targets. And just like you want to look for these divergent lows, which are bullish, and same thing, divergent lows not a buy signal, a breakout's a buy signal in an objective long entry. So is a back test of the trend line that it broke out of. That was the last, one of the best opportunities right there in AMD in years. And here's a similar wedge type pattern, trend line break, and that led to this whole downtrend right there, which comes in waves, of course. All right, next up, Qualcomm. I excluded this in my trend line because it's a pretty nice fit with this, other than this little, I think that was a pre-earnings breakdown, and then it popped back up. Either way, I like the fit of this trend line. So this one's right on support. And there's a gap there. The bottom of that gap top of that gap may come into play, but my minimum target, I think, when that breaks right here is 93.69-ish. So you're talking a drop, again, a minimum target of about 15% on Qualcomm. Sell signal still pending on that one. And look, it's also a near back test of this trend line right here. See, we had a trend line, nice clean trend line there that triggered this sell signal, led to this, and we're pretty much coming in for about a back test that close to it. So if we get another thrust up, I may revisit these stocks in a couple weeks, and we may have a back test of that line. Either way, I'd like to see a break of this trend line to trigger a nice correction in Qualcomm. AMAT, right at trend. So there's, again, common theme is some of these stocks have already broken down. Quite a few have, but quite a few are sitting right on or just above support. So these are the levels to watch. And minimum target, swing target 52.70-ish on AMAT. LRCX, Lam Research, this one's broken down. So there's a sell signal. Probably had a little, I could probably mark a little small divergence right there. Either way, we broke down yesterday, and it's fallen through pretty impulsively today, down 4.17%. First support right here, 341.50. I haven't marked the entire chart up. I'll have to, update this one to give you levels. And of course, if you remember the site, just drop a line below this post in the comments section. Hey, Randy, I'm interested in Lam Research or whatever it is. Can you give me a chart and targets? And I'll do that. There's a weekly chart right here. Just extend this divergence line. This would have been from the last time I covered it. Then we had divergence, but we didn't have a sell signal. So the divergences have continued to build. I just updated those lines, and look at that nice clean uptrend line. So when you see, if and when you see a solid red candle, especially at the end of Friday, a weekly close below here, that's going to be a pretty darn good sell signal. And on this chart, I see some support around there, but I really favor a move down here to that 29.77 level before all is said and done. At minimum, and that's about 36% drop. So a lot of potential on these guys, and we just need a little bit more work to for me to say with a high degree of confidence. But here's Micron. Micron's broke down a while ago, and it's been impulsive since. For a while there, it kind of just floundered around after the breakdown, and then boom, they were exiting that stock right now en masse. And support doesn't come in. My first target to about 40.88. So there's one that's broken down. ADI, that one broke down a little while ago. So see, some of these semis have already turned the corner and begun what appears to be downtrends, while others have not. So that's kind of the story, and that's why I'm doing this. Again, doing the video, hitting on each of these. NXPI needs to take out this trend line right here, this minor trend line. I'm going to give you one other target on that one. That's definitely a likely reaction point there, about 106.45. You can see some of the other targets. Doesn't necessarily mean these are all my current targets, so focusing on these near-term targets for now. Again, I haven't updated each and every one of these charts, but I did quite a few. And again, as I go through this, remember the common theme here is the divergences on most of these stocks. Almost all of them have these nice clean divergences, and many have nice clean uptrend line. Last time we had divergent highs was right here before this big drop. KLA Corporation, used to be KLAC 10 Core, I think, or KLA 10 Core. Either way, starting to crack right there. You can see that breakdown. Again, nothing very impulsive, but it's below trend. If it continues to fall, it's only going to firm up the breakdown. Little support right there, right about. I'm going to round that up a couple pennies to make it 200 even. And so break below 200 should put the nail in the coffin for this one and get us down to that next target there, about 184.13. Xilinx XLNX, there's one that's broken down. So we had another check mark to the sector, broke trendline support plus the 103 price support. Next stop 97.58. MCHP. This one's really boxed in. The way I see this is it's trading in this sideways trading range. It's also failed several times at this 112-ish level there. Yeah, hasn't been able to get it out. So we really need to break the bottom of the range to be bearish. If it breaks to the upside, and it does so anytime soon, we're going to have divergence unless it goes a lot higher. In other words, this is a divergence scenario here of a marginal new high in this one. And I don't know if and when they've reported recently. So it might look like this. Boom, boom. And still keep those divergences intact. SWKS needs to take out this trend line. The divergence in place, negative divergence, says it probably will, just like back here. There's your sell signal. Kick back to your entry point, and boom. MRVL, Marvel Technology. Yeah, this is what I had. I had a trend line there, broke down, back tested. When it broke down, we didn't have divergence, but on the back test, we did. Sometimes you break down and never look back. Sometimes you break down, like here, and you back test the trend line. And since it's been moving lower, right on support now. So your next sell signal will come on a solid break below 32.50. MXIM, Maxim Integrated Products, starting to crack below the trend line, pretty well defined. Nothing impulsive yet, kind of also moving sideways. Let's give it a price level here. Roughly that 68.25 level. There's also a gap down below you could certainly target. But there's a common theme. A lot of these cracking below trend, but not really moving down impulsively, and I think that's in large part due to the fact that the tech sector's being held up right now by the big fangs. QRVO, divergent high right here, just like you had a divergent high right here. There's your negative divergence. I don't have a clean up trend line, but I do have a pretty good support level here, about 119 minimum target, and that'd be a drop of about almost 9%. So even if you just want a quick trade, you might be bullish longer term, but you know that this market and the semis need to take a breather, need a pullback and correction, and there's an uptrend line as well. So I think that's a great target. And if you're an active swing trader, here's how you game it. You go down there, you cover if it hits that, especially if and when it hits that target or comes up to it. The SOX and SMH and XSD, any or all of those, and quite a few of the other semis, they're also falling to support at the same time. That's when a bounce is likely. However, if this one hits here, and let's say at that point in time, SMH or SOXX has just broken the next support level, a big support level, well, it could keep going on through there. So, I try to give you the likely scenario, the likely path, but there's a lot of moving parts to this stuff. So, if I were to short this one, whether I cover there or not to try to game a bounce or wait for a bounce to jump back in short again, will all depend on everything else that's going on in this sector, plus the market at the time. All right, next up, TER. This is Teradyne Inc. Breakdown right there. Nothing impulsive yet. You want to give it the benefit of the doubt, pull it down to catch that. We're still under the trend line anyway I draw it. So there's another breakdown, another check mark for the sector. So that's why I think aggressive traders could initiate a position at this point in time. And what'll happen is if you see more breakdowns, sometimes you get the breakdown and you kind of hover around sideways for a little bit, and once it's clear the rest of the sector's breaking down, that's when things start to fall pretty impulsive. So there it is. You probably want targets, but I don't want to rush anything here. I think that's the first support, maybe a hair below along with that reaction high. I'll have to study that chart a little further. MPWR at trendline support, so a little more downside should do the trick there. ENTG, not my favorite chart. I don't see a whole lot that stands out, so we'll move on. ON on semiconductor, trendline break there. Back test, actually not a back test, but it put in a divergent high and it's kind of moving sideways, a negative divergence in place. You can see some levels there. CRE, here's a good example. This is a textbook example of a breakdown. I don't think I've modified this trend line since the last time I did an update on the semis. Nice, clean, a lot of reactions. Breakdown was impulsive. That's everything you want to see. You couldn't get a better check mark for the breakdown, and boom, boom, follow through. Nothing but red candles since, and it still has more downside to come until we get a meaningful bounce. Sure, we're near term oversold. Could it kick back? Yeah, and if it does, where's your objective entry point? If it kicks back before it gets there, somewhere in this gap, either the top or the bottom of the gap, anywhere in between, would be an objective entry point. So it either does something like this if the sector hangs in there soon, or we continue down, and then there's your first target zone right there. MKSI, another clean bearish rising wedge. Again, common theme. Reason I wanted to do this video. Just these nice, clean, divergent highs, just like you had divergent highs there. Breakdown, back test, and we're coming up on that previous reaction low. So any more downside on this one should do the trick to open the door. I'd probably give you another, it's probably going to come in and find some support here around 116.50 first, and then work its way down here. I'm going to lower that line right now, actually down to about 108.27, and then 103.40 roughly, and maybe all the way down here at about the 94.50-ish level. CCMP, Cabot Microelectronics, had a breakdown. What I see is a primary trend line here. It broke, back tested, and continued to back test all the way up to this point, rejected recently, and it took this divergent high to do the trick. So there's your DH right there, divergent high, rejection off the back test, and a minor trend line that it's set up under the stock, and it's broken that today. So that opens the door for more downside in the stock. And there are some support levels along the way, little stopping points I see, but I think ultimately we go down here to that 126.10-ish level. Slab breakdown below trend line and price support 120 and 120, and next target there is about 92.75. SMTC, Don't have a clean uptrend. Yeah, we have a minor trend line right there. That's broken. What's that circle mean? Well, we're at an extreme overbought condition. It's about 81 on the RSI. In the past few years, the stock's only gotten there a few times. I'm going to box it in. You can already see them circled, and you can see what happened. It was here and here when we were at this extreme overbought reading as we just hit. And back then you had a multi-month correction in both time and price, and this one really was the start of this whole thing until we ended up here. You never took out that high, so odds aren't in your favor of being long this one right now with negative divergence and an extreme overbought reading there. All right, we're done. Last one here is Cirrus, C-R-U-S, Cirrus Logic. Not my favorite chart. It's kind of been stair-stepping lower, but we need to take out this previous low. Yeah, I'm not going to, let's just leave it here. It's not my favorite chart. But there's one that, long since topped even before COVID and has yet to, get up there. And in fact, it's been making a series of lower lows since then. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.